The information in this podcast is current on the day of recording. It is general advice only and does not take a personal situation into account. It may not be suitable for you.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today is Graham Whitcomb. Hey, Graham.
Hey, Gaurav.
And with us also is John Addis. Hey, John.
Morning, Gaurav.
Now, Graham, we were going to talk about Star. It's been a bit of a bomb. Tell us about it. What's happened over there? How do they report? Is there an opportunity? What's it looking like?
Well, yeah, I mean, they actually had an okay. If you look at the underlying operations, they're kind of tracking along okay. They had a good recovery this past year, but that's mainly because the previous year was still kind of lingering with COVID. And so, yeah, all of the numbers were up by about a third this year, with a big driver being the hotel and non-gaming revenue. That increased a lot because they suddenly were open an extra, can't remember how long it was, 100 days or something or other. So, yeah, they did pretty well in terms of the operations. But, yeah, they did write off, I think it was $1 billion or more. Or in total, was it even higher than that? I can't quite remember now.
Wow.
But, yeah, they wrote off a ton.
And was that off
property portfolio?
Was that specific to the Sydney property? Was there any other properties that were impacted?
Yeah, they wrote off some from all of them, but
Okay,
the bulk of it was from the Sydney one. And yeah, the main reason is because so it's kind of a double whammy. They were lowering their expectations for future income out of it because of the fluctuating tax rates and all of that. And then at the same time, they were raising the capitalization rate, which pulled down the value of those earnings. So yeah, the Sydney casino lost $1 billion or something or other from its value. And yeah, but I think that's probably overdone, that it wouldn't have actually been that bad, because when the books closed, that was in June, but it was after June that the government then announced that the taxes weren't anywhere near as bad as they had initially said. So yeah, I suspect that the cash flows will actually come in ahead of what their end of year kind of forecast would have said. Yeah.
You know, everyone thinks that casinos are licensed to print money, and they probably should be. But Star is one that has just been appallingly run from the very beginning. So think about this: when they first built the Star Casino in Sydney, they faced it with the back against the water. You know, it took them years to figure out, actually, why don't we we got this harbor here, why don't we face the water? They had to spend hundreds of millions of dollars redoing that casino to make it face the water, which I don't understand why it wasn't doing that in the first place. It's arguably in the wrong location to begin with. It's never really been as successful as Crown has. And there's just something about the management at Star that's always... It's never performed as well as you'd expect a casino operation to perform. And I don't have an explanation for that. John, you're a frequent visitor. You would have some insights.
Well, I think that's probably true, what you're saying about Sydney. You might blame the architects. I mean, it's a god-awful building.
It is horrible.
Terrible spot. I was going to make the contrary argument that they have learnt their lesson. I was in Brisbane a couple of weeks ago.
Yeah, right. Okay.
I used to go there very frequently, and I've seen that development come up.
Yep.
I mean, it's not only is it huge, it's really, really impressive.
Right.
And they built a bridge from South Bank, where everybody tends to go, where all the museums and art galleries are. There's a bridge that will funnel people directly into the jaws of this development.
Interesting.
And
straight to the gaming tables.
Straight to the gaming tables. And I suspect that, just looking at it from the outside, I've looked at the fly-throughs and all of that kind of stuff. I think they've probably got that development right.
Okay.
There's a lot of money being spent in Brisbane. They're not just on the casino there, but on the train system and the highways, and they've got the Olympics in 2032, I think it is. Brisbane was never really an attractive place to go. I remember that they used to say that they'd land Chinese tourists at the Gold Coast, and they'd at the south end of the Gold Coast at the airport there, and they'd point to the big buildings at surfers and say, "Oh, that's Brisbane," and never actually take them to Brisbane. because it didn't really matter. But now I think it will. Brisbane's a far more interesting city than what it was 20 years ago. It's a very much changed place. And that casino is right there at the center of the development. So I don't know for sure. We'll have to see. But all the mistakes they made in Sydney, I don't think they've repeated those in Brisbane.
Yeah, right. Okay.
It's also interesting. It's also interesting that the casinos haven't really been affected too much by all the other access to entertainment that we have these days, where people can gamble online, they can play games online, they can do anything from their home, but they still want to go to the casino. There hasn't been a big drop off in, say, casino attendance compared to going to do your shopping in person. So yeah, there's something about casinos that keep pulling people back beyond just the gaming, because you can get that in all kinds of forms these days.
Yeah.
So yeah.
When was your first results from that casino, Graham? When does it start generating cash flow? Do you know?
I think it's supposed to open at the end of this year, so we should start to see it pretty soon.
Maybe we should.
I would expect in the next result.
I was just gonna
Let's
say
go up to Brisbane and have a look at the
from
casino.
I think we might have to. We might have to go up there. Yeah. I agree.
And Flight
you'll
Centre's
find me
head
at the buffet.
Flight Centre's office is just across the river as well, so you go in and meet with those guys. You haven't seen them for a long time.
Well, that might be a good idea to add in a couple. There are a couple of Queensland companies we've spoken about, John, that might be worthwhile go visiting them all in the same time.
Yeah. Power.
Yeah. Okay. All right. That's a good idea. We'll do
Train
that.
ride on Horizon.
So Graham, keep an eye on that opening. When you reckon it's ready, let us know. We'll organise a tour.
Yeah.
Yeah.
Can I just make one point about Star as well, after my rant about Alan Joyce and Qantas last week, about how there's kind of when you've got a very big business that is subject to regulatory oversight and relies a lot on its competitive position for government favour, then you're exposing yourself to a risk that is normally taken for granted, but then every now and again the governments or the regulators do something sensible. And often the investment case is predicated on them not doing something sensible. And
I think they did something sensible this time.
Yeah. And often that reaction, because the government or the regulators are sort of so cowed by the adverse publicity they've been getting, they'll actually react quite strongly. I think we saw that at Star, and then they backed off, of course. And we maybe see that with Qantas in the next few months. It's just a risk that investors tend not to pay too much attention to. They just look at the the revenues coming in, the customers that are coming through the doors. But there's not normally been a worry until it is. You might go for years and not even think about it, and then something comes out of left field and the regulators do something, or the government does something that can really make a big difference to your investment case.
Particularly with these kind of sin industries where it's an easy sell for the government.
Yeah.
Like the government, it would be harder for them to come out and change the, taxes or something on a healthcare stock versus...
Totally.
Like, who's going to complain about raising rates on Star?
Well, a good example of that is Victoria, where you cannot build a new home connected to gas anymore, which just kind of blows my mind, actually.
Is that right?
Yeah, they banned it. Just banned it, which is just it blows my mind. It really does, because there are a lot of things we cook at home that kind of need gas. The electric or induction doesn't do. You can't get smokiness.
I've had this argument with my brother for a long time. He loves induction, and I was staying at his place for about a month over Christmas, and they've got an induction unit, and I'm kind of a fan now.
Yeah, well, I've had one previously.
I'm kind of
really
a fan.
like it. My wife doesn't like it. Yeah.
It's just getting past the idea of looking at the flame and going, okay, that's right. When you're doing an egg, something my kids can't do because they just turn it up. They think all kinds of cooking are best done with the flame at maximum on the biggest ring. Whether you're frying an egg or doing a stew. Just bang it up. There's no point having a button really, or a knob.
Just flame on.
Flame on, get it done. Smell the house out with burnt metal.
Yeah.
But yeah, I think inductions will eventually replace gas, and they probably should, and we'll get used to it.
Yeah, it'd be nice if that was a choice and not a forced choice. But there you go. Let's quickly move on.
Rev head speaking there, Gaurav.
It's my libertarian streak speaking.
And they won't take my petrol either.
No, no. I don't know. These electric cars, I really think this is a rant, but a life cycle emissions analysis of EVs versus an efficient hybrid or a very efficient small engined regular conventional ICE car. I mean, a lot of the studies that have happened so far shows that there's very little difference, and if anything, the legacy cars are more efficient over the lifetime. And it's just been lost. This is so much unthinking behavior going on. Mostly all driven by governments.
People love to dream.
Now, speaking of dreaming, actually, EVs was the right segue, because I wanted to have a quick.
That was a segue there, but you missed it.
It was. I just didn't realize it at the time.
If you like the sound of our investing approach and aren't yet a member, visit intelligentinvestor.com.au to take us on a free 15-day test drive. Get immediate access to all our current buy recommendations, model portfolios, and engaging educational research tailor-made for people that want to manage their own money. That's intelligentinvestor.com.au for a free 15-day trial. No credit card required.
I wanted to talk about some of these lithium miners. Over the last 6 months or so, I've been doing a lot of technical work on lithium and trying to understand the geology and the processing. And I think I've gotten there. I think I'm pretty comfortable with that stuff now, and I understand it to a degree where I'm more comfortable with lithium miners than I was a year ago. And so I've been paying attention to the results this time, being able to understand them a little bit better. And a few things have become clear. One is that it is quite hard to set up new supply. This is not like copper or even nickel, which are very forgiving commodities, in that you can have a huge variety of rocks. And if you just expose them to chemicals or acid or a known processing technique, you can get the mineral out of the rock. With the nickel, I mean, you can use bugs to get the nickel out of the rock. You can use a conventional circuit. You can use like little bugs, like little parasites, insects, and bacteria and stuff.
Really?
Yeah.
Really?
So what do you do with once they've eaten all the nickel? What do you do? How do you get it out of the
No.
bug?
They eat away the other rock, and they leave the nickel bearing ores alone.
Ah.
Yeah. It's used in Indonesia sometimes.
It's science, John. Jeez.
I mean, the point there is that you can have a wide variety of geology and still extract the mineral you're interested in. And it appears to me that with lithium, it's a much more limited choice. Core lithium is one I've been following very closely because it is the disaster, and you learn a lot by following the disasters. So they instead of having one established homogeneous piece of rock that they're digging up and mining, what they've done is they put like a low tech, very simple processing facility up in, I think it's the Northern Territory they're in. And they got a whole bunch of very small deposits, and they would gather the rock from all these different deposits into this centralized circuit, and they try and process it. And what they realized was that you need sort of a uniform rock structure to crush, grind, and to process. You can't have different types of rocks all going into the same circuits, because the lithium-bearing rock is a crystal structure. And when you have different crystal sizes, you need different processing techniques. And so that business has set up without really understanding the processing flow sheet. And I think they're stuffed. And when you compare that to something like a Pilbara, which has this very large homogeneous mine, kind of a uniform rocks, uniform crystalline structure, it's taken them a couple of years to crack the code for processing. But as they have, you've just seen profitability soar. and it's quite a complex operation. But I think they've worked hard to understand what they have and to process that correctly. And companies that don't do that, that kind of take shortcuts, that try and do it quickly or cheaply, are the ones that get into trouble. And a lot of the industry is now trying to bring on lithium supply in a very swift and I think unthoughtful sort of way. And it just shows me that there's a lot of value in one of these very large, unique deposits, which are quite rare. A deposit of Pilbara size is a rarity internationally. I think it's a top 4, top 5 deposit in the world, and it can be immensely profitable. It's going to be harder than I thought to bring on new supply, I think is the point. I just think it's going to be much more challenging, and I think existing producers are going to look a lot more interesting. And as an example of that, IGO just had a cracking slide in their deck, and they just showed the profitability of their mine. They own 25% of Greenbushes, which is the world's biggest spodumene mine, lithium mine in the world, hard rock mine. And that single mine made $10 billion in the year.
Wow.
Which and the amazing thing is they only moved a very small amount of material to make that much money. There are a couple of $10 billion mines in the world.
So that's due to the purity of the resource, is it?
I think it's due to the very high price of lithium, and also to the high quality of the resource as well. I just think that it's going to be very hard to bring on new mines. Not harder than I initially expected to bring on new resources. And I think as this lithium price falls and as it becomes out of favor, it hasn't happened yet, but it is happening. You can see it happening. I think there might be some opportunities in lithium, and it's not going to be in some new deposit or something really exciting. It's going to be in something boring and old, and that's been producing for a while, and that's cracked quite a complex and difficult processing technique. So I think Pilbara looks interesting, and I think MinRes continues to look interesting.
So are you saying the processing techniques will vary from mine to mine?
Yeah, they will. I think they have to. Yeah, there's a couple of choices you have, but unlike say copper, with copper, it's very common to set up your processing facility, and then take ore from all over the place, and centralize your processing from that one facility, even though you're accepting ore from lots of different locations.
Right.
Nickel, BHP runs its nickel business on that basis. They have a large nickel hub, and they accept nickel ore from all over the region, and then they process it and take a margin on it.
Mm-hmm.
I don't think that's possible with lithium. And I think the reason why is because the rocks are a crystalline structure. It looks as though there's a whole lot of technicalities which are going to bore everyone, but it looks as though that's going to be much more complicated than that. And I don't think that's going to be possible. So these very large homogeneous deposits, I think, are going to be incredibly valuable, and they're worth looking out for. And that's the sort of thing that I'm increasingly looking at. It's quite a different model from copper and nickel. And so I think that's what we've got to get our heads around, that this is a different, it's different to some traditional metals.
Okay. And what about, how common is lithium, and how common are those large homogeneous deposits?
Lithium is extremely common. There are two ways to really access. Well, there are three ways. The third way is a bit experimental, and they're working on it in China. But there's from little pebbles and stuff. But the two traditional ways are hard rock mining. So you blast, crush, and grind rock, which is what we do in WA. Most of the world's hard rock lithium comes from Australia. And then you've got these brines. So you drill. So the way they form, and they're mostly in South America. So there's a region there at the foot of the Andes Mountains that has 80% of the world's brines or something like that. And the reason is that a lot of minerals have leached from the Andes into underground aquifers. And as you drill boreholes and access those aquifers, you can then create these very large evaporation ponds. So this lithium-rich, mineral-rich water is left to evaporate in these big ponds.
Wow.
And you're left with a concentrated lithium material, which you then process.
So it's like salt mining.
it is like salt mining. Yes, that's exactly what it's like, except you then have to process the compound at the end a little bit further to get a carbonate.
That's incredible.
But I think that doesn't seem to be as profitable as the hard rock mining. And again, there's a whole host of technical reasons why that is. We don't need to get into it now, but we want to. The point of this rant is that there are specific characteristics that I think are attractive in lithium that we're looking for, and those characteristics, I think, to me anyway, are now becoming clearly defined. And it's a hard rock resource in a safe jurisdiction with a large homogeneous body with a uniform crystal structure, and with a processing technique, which I think I understand now. So I think the knowledge is now there, and we just have to wait for prices, which, to be honest, aren't miles away. I'm not far off from introducing some lithium companies to the buy list. So
you heard it here, folks. The next coal stocks are coming up.
Right. Should we take another break, gents, and then
do
some
thinking aloud?
If you enjoy our approach to investing, but don't want to manage your own money, check out Intelligent Investor's range of managed funds, including income, growth, ethical, and international options. Decades of research and experience is distilled into the management of these 4 managed funds, each focused on achieving outsized investment returns. Check out our performance track record, fees, and approach at intelligentinvestor.com.au/funds-overview.
All right, on to our final segment. We call this Thinking Aloud because it is both out loud and aloud.
And thinky.
And thinking, yes.
Yeah.
We smart people, good. Yeah. Graham, why don't you kick us off?
So I've got it's not a question from a member, but a comment that I quite liked. It was on the article, ResMed's interaction with Ozempic, the new weight loss drug. And Philip O says, the suggestion that ResMed's product will no longer be needed because a new speculative drug is going to rid the world of obesity has got to be one of the longest bows I've ever seen drawn. And I say, here, Philip, I agree. It's, I think that the rush for Ozempic, stocks that are going to either benefit from Ozempic or that are going to be damaged by it is really overblown at the moment. That even if you consider that this drug does help people lose weight, that the kind of fever around it is probably overblown. And I suspect that weight issues will always be something that humans have to deal with, because if you start taking Ozempic, it'll probably mean that you were more willing to eat the cake. That we balance them out. So
I actually disagree with that, Graham. I think this is I think this is a proper society changing event. And I think
really?
I think in 20 years' time, if you're wealthy, if you have money, then you won't have obesity among the rich class anymore. This is going to be like what's that the Time Machine, where the Morlocks live underground and the humans live above ground. It's going to be the rich people.
It'll be the fatties and the skinnies.
It's going to be the fatties and the skinnies. I really think so. I think this is going to be a society changing event. Ozempic, I know so many people, you can see it. You walk down the streets and you can see it. I know people have lost weight just dramatically.
But the rich people tend not to be overweight. Like it's not.
Yeah, I'd say there's lots of other factors. I can see how the insurers are going to push it because
not obese, but overweight. Yes.
Yeah, I can see it having an effect on society.
Why wouldn't you take it? I mean, if you the parallel I would draw is with antibiotics. And antibiotics just killed bacterial infection.
But there's
no degrees in that.
Yeah, they've adapted, but that's not going to happen with Ozempic. I'm saying that
I think people
was a new
will
technology.
Yeah, I think the mentality will be that people will just say, well, I'm taking this drug now so I can basically eat what I want.
But the way
that's exactly what I think. That's how I would do it. If I was taking it, I would instantly be like, oh, great, I don't have to watch what I eat anymore.
Yeah.
But
I can have
the
a
way it
massive
works, that
bar
might
of
be
It
true.
chocolate every
offsets the
day.
benefit.
No, that's not the way it works, guys. The way it works is it kills your appetite. You just cannot eat the quantities you want. If you sat there and ate cake all day, you'd still be limited in your calories because you couldn't consume as much cake because that's the way the drug works. It messes with your appetite impulse. So
It still only
even
reduces weight by 10% or so, though. So
10 to 15.
I think that's it. Yeah,
it can be up to 30%. Like it, and this is it's going to get better and stronger, and it's only time before it starts becoming an oral pill. I think once it's a pill, once you can take a pill and not get fat, there's a reason why that business is now, the company that makes Ozempic is now the most valuable firm in Europe, and I agree with that. I think it's everyone's going to be on it or some form of it.
I don't know. There's lots of people that don't like drugs. There's lots of people that don't take all kinds of things that might be to their benefit. Like I can fully see the argument of why people might want to take Ozempic, but I think there's still a big group of the population that are not going to want it, or that are going to offset its benefits by overdoing what they enjoy.
Oh, so naive, Graham. I think when it comes to human behavior, I once heard an investor saying that I focus my attention on the 7 deadly sins. He says if you can find a company that indulges in any of them, gluttony, vanity, any of those emotions, that's your way to riches. And I think there's a lot of truth to that. People's behavior can be different and it can be nuanced, but when it comes to vanity, when it comes to certain attributes, it is uniform and universal. And there's no person on the planet who, given a choice to take this pill and be thin, or otherwise you're on your own and you might be fat, there's no one on this planet who's not going to take that pill. I think it's going to be 90% versus 10%. That's the kind of range we're talking about.
Yeah,
I'd be very surprised if it doesn't have a big impact.
How governments are going to pay for this, to pay for everybody.
That's going to be the limitation, actually. The supply and the cost is going to be the limits. Is it
it'll be interesting to see when it's a generic, what happens when they're sold as a cheap generic versus as a super expensive treatment.
When does that kick in? How long does the patent last for?
They're usually 20 years.
By which time they'll make some kind of small modification to it, and you'll be able to lose 20% rather than 15%, and it's a new drug.
Yeah.
Another 20 years on it.
Yeah, so you end up always spending the higher price.
Yeah.
What do you think, John?
It'd be
what's my thinking aloud?
No. What do you think about Ozempic?
I'm still going to buy ResMed.
Yeah, I think they're two different. Yeah, they're two different
cases.
Yeah.
I think the reason why ResMed is cheap because people think they are the same thing, but they're actually different, and that's why it's cheap. So I don't know if what you say is true, that you just don't have the appetite. I don't know whether appetite is what drives my unhealthy eating habits. I think it's flavor. And whether I'm hungry or not, I could easily eat a bar of chocolate. No trouble whatsoever. I think a lot of people are probably like me. So I'd probably go with Graham's side of the argument rather than yours. But look, we don't know, do we? We're going to find out.
I wonder what this does.
Maybe it cuts your craving.
Yeah, well,
that's what we need.
It might cut the craving, but I definitely know that if there's a plate of chips in front of me, I'm going to keep eating those chips long after I'm full. And then feel bad about myself after. So if that just cuts out the craving or it cuts out the appetite, I'm still going to eat, what's tasty.
You're a smart, disciplined, intelligent person, Graham. And yet, when gluttony gets involved, all that gets thrown out the window. I just think there's a lot there.
Yeah.
John, I know you love branding. I mean, what is branding other than trying to turn, or marketing, other than trying to turn a rational, thoughtful individual into a mindless zombie of spending and consumerism, right? How do you convince someone?
I think you're starting from the wrong place, assuming that most people are rational, thoughtful individuals. Like if they were, value investing wouldn't work. Now, branding is a lot more. I think branding homes in on our innate psychological weaknesses, and it plays with those. It doesn't circumvent our rationality. It just goes straight to the heart of who we are, which is fundamentally emotional human beings rather than rational decision makers.
Yeah.
So
I think brands play into, like you said, Gaurav, with the 7 deadly sins, that the brands are usually trying to pick up on one of those of, look how sexy you'll be if you have this, look how tasty this will be if you buy XYZ.
Or they'll absolutely invert it. So if you look at, say, Magnums, the way they're marketed as an indulgence, a lot of products are marketed as like they are a deadly sin, but they're a really good deadly sin. And they're unhealthy for you, but just do it.
Yeah.
Like a lot of the fast food advertising is like that. It's kind of, you can do this, you can become this radical, you can have this radical act by consuming a burger that's got 3,000 calories in it.
Yeah, there's a burger chain here actually that I love, one of my favorites, which is called Fat Burger.
Oh yeah, there we go.
And all their ads are just like dripping with grease and everything, and that just makes me slobber a little bit. So I think it works.
Fantastic. One day I would love to set up a fund that just focus on the 7 deadly sins, the Devil's Fund or something like that, right? I just think it's good. So it's a recipe to make money.
Yeah.
Okay. Well,
throw in some casinos and you're good.
If Ron's listening, maybe that's his idea for the next fund.
The next fund.
The II Sin Fund.
The unethical intelligent investors pool.
John, you're thinking aloud.
Well, this was something that we were speaking about yesterday. We were just having a random conversation and talking about blow-ups. And over the history of Intelligent Investor, obviously we've had a great many blow-ups. If you look at our long-term track record, we've been far better at picking good businesses at fair prices rather than not so good businesses at cheap prices, I would say. And I suppose the recent blow-ups that we've had haven't necessarily been great businesses, been good businesses at cheap prices, but they've probably been poorer businesses than we thought at reasonably high prices, maybe. And we were just discussing how to handle that psychologically. And you made the comment that I just don't bother thinking about them anymore. And I think that's kind of true. I'm a little bit like that now. If I lose money, I just move straight on from it. And the premise of that, without really thinking about it, is that I go into it with the idea that I'm going to lose money. So when I do, I'm not surprised, and you can just move on from it. There's this idea in investing that you should always reflect on your losers, on your bad experiences, because that helps you improve. But hopefully you get to a stage where you can just kind of put them in the box and say, oh yeah, that was that mistake, and just move on from them rather than agonize over them and be drawn into this sort of self-analysis and self-doubt, which I think undermines almost everything. So being able to pigeonhole your losses and put them in the box and say that was that, and then just move on to the next one, I think is a really good thing.
Yeah. I think part of that is recognizing the role of luck, chance, variability in the outcome as well. That works on the upside and on the downside.
Yeah.
And some blow-ups, I'm not trying to make excuses for some of them are a result of poor analysis and poor choices, but some of them are just random choices that just don't work out. And that happens sometimes. And I lost there are probably 2 companies recently I've lost a decent chunk on. One was Money Me, which I think from my point of view didn't understand that business, didn't understand the risks or the balance sheet analysis necessary for myself, and misallocated and lost more than I needed to on that. And the other one was Dubber, which I owned for a short time. And I think when I bought that, it was probably a reasonable case to buy it. And I sold it very intelligently, I think, as well. When the red flags popped up, I sold it straight away. And I still lost a decent amount of money on it. But I never went back and thought, oh no, what did I do wrong there? How can I do that better next time? It was a speculative stock I bought that did not work out. I just think that happens sometimes.
Yeah,
and
that's right. What a surprise.
What a surprise. The coal thing is similar as well. I mean, it made a huge windfall on the coal stocks. I didn't look back and think, oh, geez, I did that really well, or I nailed that. Got very lucky that Russia decided to invade Ukraine. There's a lot of luck involved with that as well. And I didn't feel the highs of that. And I didn't feel the pangs and lows of Dubber or Money Me. I just think we got to get used to this idea that random variation luck plays a big role in the outcomes here, and can't get carried away with emotions up and down.
I would say that,
Yeah, I agree.
is it that Rudyard Kipling thing where he says that you approach success with the same mentality as you do failure?
Oh, I haven't heard that. Okay, right.
Maybe that's wrong. Maybe a subscriber or member can correct that for me. But I think that kind of captures it. If you're kind of ambivalent about the outcome, you don't, then you don't persecute yourself. And I think that helps to make better decisions when you come to the next one.
Yes. I think as I get older, the more I realize that this game you need a certain amount of analytical nous, and you get that pretty quickly. It's not really the hard part. After that, it's just making good decisions. And so you've got to put yourself in situations where you can make good, sensible decisions. And that means not getting too elated, where you get, I think, hubristic, and also not getting too down on yourself, where you're just too afraid to make decisions at all.
Just with Money Me, and Graham, you're on top of this as well, but have you had it's interesting to know whether any of us have gone back to it, because the share price has been absolutely hammered.
Yeah.
The branding's still there, the money's still coming in. What do you think? What do you think of that situation now?
Sorry, whether anything has what? What was the question?
Just that the share price at Money Me has obviously been hammered. It seems to me as though the business is still functioning in a reasonably
they're now making decent profit. Because they've stopped writing new business. The profitability is
it's a loan book runoff situation now.
It could be
Yeah, this was a good example of, like we were talking earlier about how the share price can impact your psychology, because kind of every step of the way on the way down, I thought the share price was overdone. The losses were overdone, and eventually, once you're down like 95% or something, you start thinking, well, maybe I wasn't right up at the top.
I'll just wait for that other 5% to disappear before I get confirmation.
Will I take it to zero before I think that I made a mistake? But so I mean, I clearly got it wrong with Money Me, but it's still hard for me to not look at it and be like, well, this is just cheap. And I kind of I don't own it anymore myself, and I don't even read its stuff anymore because it was a painful loss. But I mean, once bitten, twice shy, I guess. But it doesn't look. It always looked like it was going to do better than it did, I guess.
That's we've got to wrap up soon, boys. But that's actually one of the hardest things to do, is when you've lost serious amounts of money, and then to go back and look at the stock. I still find that. I've done that once.
You get burned.
It's really hard. It is really hard, because if you lose money twice on the same stock, that has got to be the most painful thing.
There's a great quote in Brazil, which is a dog bitten by a snake is afraid of sausages. And I feel that that's a very true statement.
I love that. That's a great way to finish, I think, actually. Love it, Graham.
Just before we go, to remind members that we do have a webinar coming up a week tomorrow. So that's on Thursday at midday, where we're just going to do a reporting season wrap, take some questions. It's going to be live. Is it an experiment? I suppose it is. Conversation probably not too dissimilar to this one, but maybe with some different stocks and more stock focus. So if you're interested in that, you'll be getting an email on that shortly if you haven't already, and just register online. Part of your membership, no cost. See you there.
All right. We're doing that, aren't we, John?
Yes, we are.
Okay.
I tried to organise that with you yesterday. And yes.
Confirming
with Gaurav. Nobody's heard from him, but he's going to be there.
You'll get the email too, Gaurav.
Yeah. No, I'm notoriously disorganised. So yes, guys have to be extra gentle. All right. Appreciate that. Graham, thanks very much for your time today.
Thanks, Gaurav.
John, a pleasure as always.
No, it's great. Thank you.
And for everyone else, thank you for listening.